Is it? This is consist of both the, if I put the things, this consists of both they are asking us to calculate both the consolidated statement position and consolidated statement of profit and loss account. We are doing both. Understand? We are doing both. Fine. They will ask only.
Exam only one.
They will ask only one. Very clear instructions. So, if there is, we are taking more time, don't worry about that. Fine. Now, coming back to this. Papilla acquired. Working note 1. First and foremost, you have to put, whatever you are doing, you have to put group structure. Is that you have to keep group structure. Papilla P, you can put like this, nothing will happen. Okay, you can put like this 70%, and automatically what will happen, it is 30%. 3 years ago, is right? They are talking in terms of what? They are talking in terms of 3 years ago. 3 years ago means anything revaluation is there, we have to do all those calculations. The financial statements are like this. Okay, they gave you the financial statements and they gave you the statement of profit and loss account. One by one. Okay, you are provided with the following additional information. How many points are there? 5 points are there. Santiago had planned in its financial statement. Oh, this is the subsidiary. Okay, Santiago. At the date of acquisition, carrying amount is how much? 100,000. But fair value is how much? 120. Revaluation gain is how much? 20,000. Revaluation gain is 20,000, and you have to calculate depreciation on the revalued amount. Understand point? You have to calculate depreciation on revalued amount. The planned remaining life is how many years? 10 years. Depreciation is charged to cost of sales. See, simple instructions are given very clearly. Work out in small workings. The group value NCI, non-controlling interest, at fair value, already they gave. The fair value of NCI is how much? 250. Goodwill has been impaired by a total of 30% of its value. Impairment is there, 30%. At the reporting date, at which 1/3 is related to the current year. They have a 30% of impairment, and of which 1/3 is related to current year. At the start of the year, Papilla transferred a machine to Setigo. How much? 15,000. The asset is how many life? 3 years. It has a carrying amount of how much? 12,000 in the books of the date of transfer. There is a transfer, okay? There is a transfer from one company to another company. We will take that into consideration. During the year, Satigo sold some goods. How much? 60,000 at a markup. Is that markup means 100 plus 20? Okay, 100 plus 20. 100 plus 20 means 120 by 120. Is it right? 1 by 6. Okay, 1 by 6. Okay, you have to take this. Automatically you will get 40% of the goods remain unsold, or 40% of 60,000. Year end. At the year end, Satigo books showed a receivable balance of 6,000. Satigo showed a receivable balance of as being due from Papilla. This is the payables and receivables. Okay, this disagreed with the payables of 1,000. Is that you have a receivables of 6,000, but there is a disagreement. Papilla books due to Papilla having sent a check to shortly after before the year end, which was not yet received. We will see. They have paid dividends. How much? 20,000 March 1st. We have done yesterday dividends. Okay. If it is during the year, then we have to deduct the dividends. What we have to do, we have to prepare on 31st March 2007. When they have paid dividends, they have paid dividends on 1st March. Is that we are preparing the profit and loss, we are preparing the financial statements for 31st March. Okay, we are preparing 31st. 1st March they have paid dividends. Okay, 1st March they have paid dividends. Fine, how much is the dividend investment income? See the thing. Investment income is 20,000. Okay, investment income is how much? 20,000, and Satigo, how much they have paid dividends? They paid dividends of 20,000. Okay, fine. Now, coming back to this, what we have to do? The first one is the group structure. Okay, the first one is going to be the group structure as such. Now, we have done the group structure. Second one, what we have to do?
NCI.
NCI. Okay, second one, NCI. Working to is NCI. NCI, what we have to do? We have to write particulars at acquisition, at reporting date, is it right? Post acquisition profits. Is that post acquisition? What we have to take in NCI? We will take these things. Okay, we will take this one. Okay, we will take this is the reporting date. Is it right? It is the reporting date. And usually share capital will remain same. Usually, is that till that one? How much is there? Share capital is 150. This is at the reporting date 150. This is the in the bottom of the paragraph. They have mentioned something. Okay, they have mentioned how much is the retained earnings, how much is that, all the things they have mentioned. Where they have mentioned it? Not they have mentioned here. See the things. They have mentioned in the first line. Papilla acquired 70% of Sadico 3 years. At the time at the acquisition, how much is the retained earnings? How much is the retained earnings? In the first line, how much is the retained earnings? 430. Okay, how much? That is the at the date of acquisition. Is right? This is at acquisition. Is that this is at acquisition? Is that this is at acquisition, and this is at reporting date? Is it right? This is at reporting date. Now, how much is there? Is that if you take retained earnings? Is it? If you take retained earnings, is it right? How much is there at the date of acquisition? Is how much? At the date of acquisition is 430. Okay, this is in thousands. Okay, this is in thousands. At the date of acquisition is 430, and at the reporting date is how much? 700. How much is the difference? How much is the difference? 270. Okay, how much is the difference? 270. Okay, fine. That's all. We have completed this two. This we have done, this we have done. Now, any fair value adjustments are there, we have to check. Is that any fair value adjustment? Yesterday or day before yesterday we have done. Is that fair value adjustments? First point, take one by one. They have planned in the financial statement, acquisition, carrying amount of how much? Carrying amount is 100. Fair value is how much? 120. Is that fair value is how much? 120. How much is the adjustment of the machinery acquisition fair value? The part of the remaining life of 10 years is this much. 1 minute. I just want to know. I want to reconfirm it. Fine. Okay. How much is the increase? Increase is how much? 20,000. Is it right? 120 minus 100. Okay, 120 minus 100. How much is the fair value adjustment? Is that fair value adjustment? It will remain same at the date of acquisition as well as at the date of reporting date. Okay, they have made at the date of acquisition, the remaining life is how much? Remaining. Now on 20,000, we will charge depreciation. Okay. First we will take 20,000 as it is. Okay. First we will take 20,000 fair value adjustment. Is that fair value adjustment? I will write here point number 1. Okay. How much is there? Within brackets 120 minus 100. Is it right? How much is there? 20. Here at acquisition also 20. At reporting date also 20. Now, but what happens? What happens on this? They have mentioned very clearly. The plant has a remaining life of how many years? 10 years. But
10
how
years.
many years we have done? 3 years before.
3 years.
Is it
Yeah.
right? 3 years before. Is it right? 3 years before. What we have to do? Depreciation. Is it right? Depreciation, fair value. Okay? Depreciation on fair value.
Fair value.
Adjustment, fair value adjustment. 20,000, it is in thousands. 20 divided by 10 years in time 3
7.
years. Is that 20? See, now you can say acquisition we are not doing anything. Reporting date what we are doing? We are removing the depreciation. We are deducting the depreciation. How much? 6. Okay. Acquisition we are not doing anything. Okay. Now, how much is there? 6. Okay. How much is there? 6. Are you clear about this?
Yeah. Yes.
Okay. Fine. Next. What they say, what they have said. Fine. Next. What we have to do after this? What we have to do after this? What we have to do after this?
Impairment?
No, before impairment. See what they have done. Point number 3 is that goodwill will come to goodwill impairment at the when we are doing goodwill. Okay, when we are doing goodwill. Okay. Now what we have to do is they have how much they have said. They have taken the how much they have transferred machinery. They have transferred machinery of how much?
15.
15. How many remaining useful life is how much? 3 years.
3 years.
At the date of transfer. Carrying amount is how much?
12.
Carrying amount is 12. Okay, carrying amount is 12. Now, we have to calculate the, see what we have to do. First we have to see, I will put like this, where I will write working, I will write working 3 here, okay, little bit here, okay, working 3, okay, little, very careful, how much is, see, how much is the current value is how much?
15.
No, yeah. Current value is how much? 15. Okay. Current value. How many years are there? See.
3 years.
Now what they have said? They have said that at the start of the year, how much is the value? Is it right? At the start of the year. When we have started one. This is related to non current asset. Non-current asset, point number 3. Okay, non-current assets, point number 3. How much is the beginning value? Beginning value is right. How much is there? 15. Okay, beginning value is how much? 15. Now we have to calculate. See what they say. They say that it is a machinery. Is it right? It is a machinery minus. Okay, at the start of transferred. Okay, fine. Transferred value is how much? Fine. At the start of beginning value is how much? 15. Beginning value is minus depreciation. How much is the depreciation? 15 times 1 by 3. Are you clear about this? Are you clear about this? 15 times 1 by 3. 1 by 3 is the number of years. How many years? Remaining useful life is how much? 3 years. How much is the remaining useful life? The remaining useful life is 3 years. Is it right? I will put more clear on this. Okay, I will put more clear. 1 year divided by 3 years. Is it okay now?
Yeah.
Okay, 5. Okay, how much is there? It is 10. It is 10. Fine. Now they said another thing. It has a carrying amount of 12,000 in the books. Book value is different, transfer value is different. Is it? Book value is different, transfer value is different. This is the transfer value. Okay, beginning value is the transfer value. Is it? Beginning value is the see, book value is different, transfer value. The second one is we are talking in terms of what? In terms of book value. Is it right? In terms of book value. How much is the book value? Book value is 12. Okay, book value is 12. Same depreciation. Is that same depreciation without transfer? Okay, depreciation at book value. Why we are doing? We want to know what is the difference between the book value and the transfer value. That difference we have to identify as a portion of unrealized profit. Depreciation at book value is how much? 12 times 1 by 3 years. Same formula, same rule. Okay, 12 into 1 by 3 years. How much will come? It will come 4. Is right? It will come 4. How much is the now transfer value at the beginning of the year is 15. During the year they have done depreciation 5. How much you got it? 10. As per the book value, beginning is 12. The depreciation is 4. What is the transfer value? Transfer value is 8. Is it right? Transfer value. See, when we are making a transfer, once it is acquisition, then there should not be any profits. We have to take at the book value. Find how much is there. This is little bit new thing we are learning. Okay, I will tell you where it is. This is nothing but portion of unrealized profit on transfer. Okay, on transfer of non-current asset. See the things, very simple. Okay, very simple. Point number 3, again I say point number 3, they have transferred 15,000. Okay, how many life is there? 3 years. Beginning of the year. Okay, beginning at the start of the year. Now at the start of the year 15. For 1 year depreciation minus 5. How much you'll get? Transfer value is 10. What is the book value? Book value is 12. Okay, book value is 12. You have to also calculate the depreciation of the book value. Definitely, you have to any additions are there, any increase in value is there, we have to deduct. What is the portion of unrealized profit? The portion of unrealized profit is 2. These 2 we have to deduct from the NCI. Is that this 2 we have to deduct it from the NCI minus, is that minus portion of unrealized profit is how much? PUP. Is it a portion of unrealized profit? Working 3. Is it? Portion of unrealized profit is how much? 4. 4 or 3? Portion of unrealized profit is how much?
Check it down, doctor. It isn't right.
Portion of how much we have calculated? 2.
2. 2.
Fine, 1 minute, 1 minute. Okay, fine. Portion of unrealized profit is how much?
2.
2. Okay, portion of unrealized profit is how much? 2. Now, just I want to make sure that how can I put it in the well. Okay, portion of unrealized profit is 2. Just put like this. 1 minute. We can. 1 minute. Portion of unrealized profit is 2. Okay. Portion. Just keep that one. Okay, just keep that one like that. Okay, we will just come with some more information is needed. Okay, some more information we have to put. Okay, don't worry. Portion of unrealized profit is how much? 2. Okay, fine. Now, coming to the next part. Okay, coming to the next part. What is they are keep that. Still, it is some information we have to add. Okay, some information we have to add during the year. So point number 4. Okay, during the year, Satico sold some goods to Papilla for 60,000. Is it as at the markup of how much? 20%. Markup means 100 plus 20. total value will be 120. Is it right? 40% of the goods remain unsold. Is it right? How much it has been remain unsold? 40%. 40 of the year. Yeah. At the year end, Santica's books showed a receivables balance of 6,000. Is it receivables balance of 6,000? Due to from Papilla. See, you divide this one. Okay, there are too many things are there. Is that you divide this sentence here, you divide this sentence here. At the year end, is that this is the second one. This is related to receivable. They have a disagreement of 1,000 to Papilla sent to check to Statico shortly before the year end, which Statico has not yet received. Is it? Which Statico has not yet received. So many things are there, okay? So many things are involved here. Fine. So many things are involved here. 1 minute. One thought, payables and receivables we have to deduct one. Okay, one thing at a time we will do, okay? One thing at a time, otherwise we will land up somewhere. Fine. Now how much is the profit on sale? Profit on sale is how much? Point number, see, working 4, okay, working 4. Actually, what is the sequence of working margin? Working 1 is group structure, working 2 is what?
Net asset.
No, NCI. Working 3 is how much? Working 3 is, what is working 3?
Supposed to be goodwill.
Yes, goodwill. Working 3 is goodwill. Working 4 is what is working 4?
Is
NCI.
yeah.
Is it right? Working 4 is what?
Yeah.
NCI, and
NCI.
working 5 is retain earnings.
Return earnings.
Okay, working 5 is retain earnings. Is that? We have missed that one. That is the reason it happening like that. The moment we'll jump now, we will jump, it will make things little bit more complicated. Okay, it will be little bit more complicated. Okay, so 1 minute. I will put this. I will not put any working here. We have done where we have done this. Is it right? Portion of unrealized profit. Still, portion of unrealized profit is not complete because we have something related to the NCI. Okay, we have something related to the NCI with respect to the transfer, depreciation and transfer of assets, all those things. Okay, we have something related to NCI and see. 1 minute. Just give me the space. See what we will do. We will do. Just we are keeping that pending. Okay, we are keeping that pending. Working 3. We will take goodwill. Is it right? We will take goodwill. In the goodwill, what is there? How we will start? We will how much they have paid to purchase investments.
Goodwill.
Investments, how much they have purchased? What is the value of investments? Parent company holding. How much is the investment at fair value? They have mentioned anywhere. They have mentioned anywhere that they have given first paragraph, second paragraph, balance sheet. Is that? See the thing. Point number 1 is related to the
250
plan.
that there?
Huh?
250,000.
1 minute. 1 minute. 1 minute.
Okay.
1 minute. Point number 1 is related to plant. Point number 2 related to NCI. NCI at acquisition 250,000. Point number 3 related to the transfer of machine. Point number 4 related to the inventory. Point number 5 related to the dividends. Okay. Now they have not mentioned in any way, but in the balance, if they have not mentioned in any way, usually they will mention. If they have not mentioned in any way, in the balance sheet, they have investment in yes at cost. Is it right? Investment at yes at cost. How much they gave investment in yes at cost? It gave 700,000. We don't have any way. Understand? We have checked. Anyway, there is no purchase consideration. There is no that they have paid cash. Nothing is there. The only thing that is available for us is in the balance sheet. How much is there? They have taken it as in thousands. In thousands, they have taken it how much? 700. Is that in thousands? 700. Fine. Now, what we have to add to this?
This is same as the cash paid.
Yes,
okay?
but here we don't have any cash paid. Is it right? We don't have any cash paid. If we have cash paid, we have to take that into consideration. Here they don't have mentioned anything. Is it right? They don't have mentioned anything. They have mentioned only the investment in yes. How much investment in yes? 700,000. Is it okay?
Yes.
Now, what we have to add, what we have to deduct here? What we have to add, what we have to deduct here?
We have to add NCI.
We have to add NCI at acquisition. How much is NCI at acquisition? 250,000. It is there. It is there. NCI at acquisition. Point number 2. It is there. The fair value of NCI at the date of acquisition is how much?
20.
250.
One.
250.
Yeah.
Is it
Yes.
right?
Yeah, 250.
Is it right? We have 250. Just we have missed something, okay? 250. How much is there? 059. Okay, 059. No, my dear. We have 1 minute. 1 minute. 1 minute. This is correct, okay? Don't worry about it. This is okay, okay? This is okay. This is okay. Because what happens here, we have to take less fair value of NCI at acquisition. Is it right? Fair value of NCI at acquisition. This is needed here, okay? This is needed here. This will come from working 2. Okay, this is comes from working 2. Fine. Fine, this comes from working to. One minute, I'm just revising the things. At acquisition, this is okay. At working to, I am taking, okay? Working to, I am taking. Working to. At acquisition, this is okay. Retained earnings is fine. Fair value of adjustments is okay. Fair value of depreciation is okay. Fair value of depreciation is okay. Here we got struck. Is it? Here we got struck. Now 1 minute. Okay, it's 1 minute. How much is there? See, the beginning value is 15, 5, 10. Book value is 12 and 4. Is it? Book value is 12 and 4. Book value is 12 and 4. And the portion of unrealized profit is 2. Is it? Portion of unrealized profit is 2. Portion of unrealized profit is 2. We have to make this adjustment of 2. Portion of unrealized profit is 2. Portion of unrealized profit is 2. This 1 minute. $15,500. How much is difference in depreciation? Difference in depreciation between transfer value is 5. Difference in book value is how much? Book
16.
value is 4. Is it? Difference in statement of financial position. Statement of financial position. What we have done? We have calculated excess depreciation or less depreciation. We have transfer value is 15, book value is 12. Transfer value depreciation is how much? 5. Book value
5,
depreciation is how much? 4.
4.
We will see. We are going to take this into consideration when we are calculating the cost of sales. Okay. When we are calculating the cost of sales, we will take this into consideration. There is no doubt on that. Okay. There is no doubt on that. Now what happens? There is a difference in we have calculated excess depreciation. Is it right? Transfer value is 15, book value is 12. When you are making an acquisition, we have to calculate. We should not add profit. That's very important. We should not add profit. Now, when you have taken that into consideration, the depreciation as per the transfer value is 5. whereas the depreciation as per the book value is 4. This is the excess depreciation we have added. Is it? This is the excess depreciation, profit on portion of unrealized profit. Okay, this profit we should not deduct, we have to add it back. We have to add it back to where, see, I will put like this, is it right? I will put in purple color, is that I will put in purple color, and we have to take this into consideration in terms of I will put a working here. Okay, I will put a working here of 6. Okay, I will put a working here of 6. 1 minute, just give me time, I will explain you. I know working 6. Okay, working 6 at the reporting date. Is it right? At the reporting date, how much we have calculated excess depreciation? We have calculated excess depreciation of 1,000. Is that 1,000? Now we have to add back this. This is the unrealized profit at the reporting date. Okay, at the reporting date, how much is there? It is 1. See, again I am saying, is a little bit new one. Okay, you have transferred value is 15. Last time I will tell you, transfer value is 15. Is that? I will remove this. Okay, you have a transfer value is how much? Transfer value is 15. What is the book value? Book value is 12. Okay, now you have calculated depreciation here 5. You have calculated depreciation 4. Is that? You have calculated depreciation. How much you have calculated extra depreciation? You have calculated extra depreciation of 1. Okay, you have calculated, means you have already deducted. Now you have to, what you have to do? You have to add back the depreciation on the reporting date. Okay, on the reporting date you have to add back that depreciation so that it will remain same. Now when you are talking about this, when you are talking about the difference here, how much is there? Here 10 is there. Here it is how much? It is 8 is there. There is a difference of 2. Is that? We will also take this difference. Okay, where we are going to take this difference? We will take the difference in the cost of sales. Okay, in the cost of sales, the depreciation in the cost of sales will take this into consideration. Is that? Just hold it for a while. Once we complete this, we will have more clear picture, complete picture I can say. Okay, we have a complete picture. Fine. Now this is, we are thinking in terms of what? Thinking in terms of point number 3. Now point number 4, what they said? Point number 4, they said that there is a sale of inventory, sale of goods of 60,000. So markup is how much? 20%. Okay, markup is how much? 20%. Fine. When markup is 20%, what is the profit they are earning? They say that 40% of the goods are remain unsold. Is that? 40% of the goods remain unsold. Okay, 40% of the goods remain unsold. Is that? I will put this here only. Is that? I will put this here only. Okay, now see the thing. This is point number 4. Okay, point number 4. What is the profit of sale? Profit on sale is how much? Profit on sales is 20% plus markup. Is it right? Means 100 plus 20. It comes to how much? 120%.
120.
Is it? 20% is the profit. 20% is the profit, 120 is the sales price. Okay, 20% is the profit one. If 120%, is it that if 120% 120% is if 120% is sale value, is 120% is the sale value, profit is how much? Profit is 20%. If 60,000 is the sale value, profit is question mark. 60,000 divided by 120 times 20. How much you will get? How much you'll get?
1,000.
How much? How much you'll get? 10,000. Is it right?
120 about 120.
60,000 times 60,000 divided by 120 multiply by 20.
Okay.
It comes to how much? 10,000.
10,000.
Okay.
10,000. 10,000.
10,000. Fine. 10,000 is the profit. How much the goods remain unsold? Goods remains unsold. How much? 40%. Okay. Portion of unrealized profit. Portion of unrealized profit is 10,000 times 40%. It is 4,000 or 4 in thousands. Are you understanding this?
Last part, no.
Okay.
Good.
Okay. Okay.
Yeah.
Okay, fine. Okay. See, now, profit on sale is how much? 20% on markup. Okay, 20 means 100 plus 20. Okay, 100 plus 20 means 120 is the sales price. If the 120% is the sales price, profit is how much? 20 markup. If
20.
60,000 is the sale value, what is the profit? Question mark. We'll get how much profit is how much? 10,000.
10,000.
Now, in 10,000, is it right? 40% of the goods have not sold. Is that 40% has been not sold? If 40% is not sold, we should not take profit on that 40%. Is it? We should.
And this goods unsold, we'll have to take it from 10,000, not from 60.
No. Pardon?
Goods remaining unsold.
Okay.
The percent is at 40%. We have to take it from 10 or from 60.
What we will do in 60? Tell me. Where will show 60?
Because 60 we took out 10, no? That 20%.
Okay, I'll agree with you. Where will show 60? Where will show 60? 60,000 where will show? Yesterday and day before yesterday, what we have done? Yesterday and the day before yesterday, what we have done? Where we will show? In profit and loss account.
Okay.
Where we have shown in profit and loss account. I know you people know. That's why I'm just holding my answer. Where we have shown profit and loss account. One person is purchase, one person is sale. From the sale we will deduct 60,000. From the purchases, we will deduct 60,000. You have done?
Don't remember.
Okay. I'm going to the yesterday question. Okay. I'm going to the yesterday question. Here we have done intercompany sales 4,400. Here we have done intercompany sales 4,400. See the screen.
Mm-hmm.
It is there.
Yeah.
4,400. Here also we have deducted intercompany sales.
Yeah.
Is it right? Intercompany sales
Yes,
is
yes.
there. We have deducted 4,400 in sales. We have deducted 4,400 in cost of sales.
Cost of sale.
Okay. Similarly, in here also in test your we are not changing the rules. Here also in test your understanding, what we will do? We will deduct 60,000 from the sales and we will deduct 60,000 from the cost of sales.
Okay.
Is it right? We will deduct 60,000. That is the reason. You take test your understanding. You take test your understanding 2. You take test your understanding 3. In all the cases, we have done the same process.
Yeah. Yes, doctor.
Is it right? In all the cases, we have done the things in the same process. Whereas this profit portion of unrealized profit, it is not sold. We will add it back. Okay, we will add it back. Are you clear about this now?
Yes, doctor.
Okay. Now, what happens? That is the reason. If any doubt is there, you ask me. I will go back to the previous question and I will tell you what we have done. And so that you will have more clarity on the system as such. Fine. Now, what we are doing here, see the things. Depreciation we have added, okay? Depreciation, we have calculated excess depreciation. Is it right? We have calculated excess depreciation. That is the reason we have added it. Whereas, is it right? I will put this as working 7, okay? Working 7. How much is the portion of unrealized profit? Working 7, portion of unrealized profit. Is it? Portion of unrealized profit. How much is the portion of unrealized profit? Working 7. The portion of unrealized profit is 4. See, you should ask me the question. Is it right? Here we have added, okay, we have added depreciation because we have calculated excess depreciation. Whereas in the second case, is it right? In the second, this is plus, okay, this is plus. I am changing now, okay, this is plus. This is plus. Why we are doing this? I will write for your understanding. This is the excess depreciation. Is it right? This is the portion of unrealized profit on what? Portion of unrealized profit on inventory. Both are different. Is it right? Both are different. It has been not sold. We are going to deduct it. Because we have calculated excess depreciation, we will add it. Again, I will take working note number 2. Okay. We have taken the share capital. We have taken the retained earnings. We have taken the fair value adjustments. Fair value adjustment, always we take the same values. But subsequently, we will deduct the depreciation on the fair value adjustment. Next, we have taken the excess depreciation and subsequently we have taken the portion of unrealized profit. Is that? This much is there. Check again. Anything is there. We have taken point number 1. We have taken point number 2. Is it right? We have taken point number 2. Point number 2 we don't require here. Okay? We don't require here. We require in the goodwill. Point number 3 we have taken. Is that point number 3 we have taken transfer value, point number 4 we have taken, and point number 5 is the dividends. Okay, point number 5 is the we have means we have to cross check whether we have covered all the points or not. Now what happens? Do the total, how much we'll get? 150, 430,
Yes.
530, 580, 600. Check.
Yeah, 600.
850, 850, 870, 871, 861. Check. $270, 260, 261. Check.
Yeah, 150 plus 61.
Is it okay?
Yeah.
Fine? Yes. Okay. Any doubt is there, you stop me. Okay. Any doubt is there, you stop me. Now, how much is the fair value of NCI at acquisition? This value we have to take always, and this value we have to distribute. Understand? But two things are there. Is it right? 261 we have to distribute. Okay. This we have to multiply by
70,
only
30.
30%. Okay, share of subsidiary is only 30%. Whereas this value this value we have to take in working 3. This value we have to take in working 4. Okay, this value we have to take in working 4. Fine. Now, how much is the fair value of NCI at acquisition? The fair value of NCI at acquisition is how much? 600. Is that the fair from working 2 we got it? Is that how much is the difference? The difference is 350.
350.
Is that the difference? This is,
Yeah.
you can put this as goodwill before impairment. Okay, goodwill before impairment. How much is there? 350. They said that, what is the point number? Point number 2. Point number 2, they said that goodwill has been impaired by total how much? 30% at the reporting date, and of which 1/3 is related to what? 1/3 is related to 1/3 is related to how much? To the current year. Okay. Now, how much is the goodwill impairment? Minus goodwill impairment. Point number 3. How much is there? 30%. Okay, 105 times 30%. Sorry. 350 times 30%. 350 times 35, 70 plus 35, 105. How much will get?
105.
How much will get? 245.
Yeah.
See, current year is how much? This is the goodwill. Okay, this is the goodwill. Okay, how much is the current year? Current year related to how much? Current year is related to how much they have mentioned. Current year is how much? 10%. Is it right? How much is there for the current year? 1/3 is related to the current year. Is it? 1/3 is related to the current year. Means, is it? Goodwill impairment is how much? Goodwill impairment times 1/3. This is for what? This is for the current year. means 105 1/3.
Hmm.
Is it right?
So
105
wait,
1/3. How much is there? It is going
it's
to
mean,
be,
doctor, it's mean they are asking us to take out the first year only impairment.
yes.
It seems, yeah.
Is it right? They are asking us to take first year impairment only. Okay? First year impairment only. See, this we will do, in the, this we will do 35. Okay? We will take this into, while doing the income statement, we will come across. Okay? While doing the income statement. Now, I will tell you now only how it is going to be reflected, so that you should not have in the uh, in the income statement, how much we will say current year is how much? We will deduct how much from the current year?
35.
35. Okay, in the income statement, we will deduct how much from the current year? 35. Whereas in the balance sheet, how much we will show?
To 105,
How much we will show in the
245,
balance sheet?
245.
245. Okay, that's why I'm saying, is it that I will give clarification now only. Is that this you are going to show in the statement of financial position? This you are going to say in the statement of profit and loss. Is it a statement of financial position? We are impaired, 30% is the impairment, but in the statement of profit and loss account, we will take only for the current year.
Hmm.
Okay, we are going to take only for the current year. Yeah, these are the things which they will test. Okay, if whether you are having the command over the calculations or not, that's what we say. Is it okay? Fine.
Yeah.
Working for. Is it right? Working for. NCI. Is it NCI? What are the things you will take in NCI? Tell me the steps.
NCI at the acquisition.
Good. Good. NCI value, NCI at acquisition. Is it right? Where they have given in working point number 2. Is it right? They have given in NCI at acquisition. How much is there? We can put from there, or we have taken. How much is the NCI at acquisition, value at acquisition? Point number 2. Okay, point number 2. Is it? Point number 2. How much is there? Point number 2. How much is there? 250. Okay, 250. This is in thousands. Okay, next. What we have to take next?
Minus post acquisition.
Plus, not minus. Add.
Plus idea.
Share. Why we will take profits? Is it right? Share of
Yeah.
post acquisition profits. I told you here. The moment I put what I told you that this one we are taking in where? This one we are taking in the step 4, working 4. Is it right? 261 times, what is the percentage? 30%. Subsidiary how much? Subsidiary is 30%. Okay, 261 times 30%, it comes to how much? 78.3. Anything we will take?
Goodwill impairment.
Minus
Goodwill impairment.
NCI share of goodwill impairment. How much is the impairment? Total impairment is how much? 105 times 30%. It comes to how much?
245.
Check again.
105.
105 times 30%.
31.5.
31.5. Anything else we will take?
After the value after 3 years. After 3 years.
No, nothing is there. Net NCI at acquisition, share in post acquisition profits minus share in the goodwill. How much you will get? $250 plus 78.3 minus 31.5. You should ask me questions. I am waiting for the questions which you are supposed to ask. 296 point how much? 296.8. This is NCI. Where we are going to show this NCI? This NCI is where we are going to show this. It is in the balance sheet or it is a profit and loss account?
Balance sheet.
Balance sheet. Yes, yes. Statement of financial position, SFP. SFP. Okay. Slowly and steadily you check. Okay. Now, see why we are having some difficulty is I am telling you this. Because we are doing simultaneously profit and loss account and balance sheet. That is the reason we are finding some challenge. Okay. Now, this is with respect to what? This is with respect to statement of financial position. What is the NCI for statement of profit and loss? Is a statement of profit and loss. What is the profit of the subsidiary given in the profit and loss account? Tell me. What is the see here they have mentioned how much is the profit for the year? How much is the profit for the year? 100. Okay, we have to start with 100. Okay, we have to start with hundreds. Is it profit? What they have mentioned? Profit for the year. Is it profit for the year? How much? 100. Now you will get the things done. Okay. Now what we have done? Point number 1. Okay. Point number 1. You have a revaluation. How much is the revaluation? 20 is the additional amount. Is it right? See the thing. Point number 1. Slowly I am telling you this. They have revalued the plant from 100 to 120. The remaining plant has remaining life of 10 years at acquisition. Depreciation is going to be charged how much? Depreciation is going to be charged at 10 for cost of sales for 10 years. Okay. While doing this, the profits will decrease. The profits will decrease, the cost will increase. Understand point? The profits will decrease, the cost will increase. Depreciation. on revalued plant. Okay, revalued plant. 120, is it right? 120 minus 100,
100.
20 times, we are taking it for 1 year divided by 10 years.
10.
1 year divided by 10 years. What will happen? It is 2. It is 2. Fine. Okay. Now you will understand slowly and steadily. Okay. Nothing is difficult. Second point. Point number 3. What we have done? We have done how much we have calculated excess depreciation. This is the excess depreciation. Is it right? This is the excess depreciation. Excess depreciation. Here also what we have done in working 2, we have added it. Okay. We have excess depreciation. We have already deducted. Plus. Is it right? Plus excess. I will put very clearly. Excess depreciation. Is that working? Which working it is there? It is working number 6. Okay, working number 6. How much is there? It is 1. Is it? It is 1. Okay, next. Working number 7. What is there? We have unrealized profit. How much is the unrealized profit is there? Unrealized profit is 4. Okay, unrealized profit is 4. Okay, unrealized. What we have to, that's definitely we have to deduct our unrealized profit minus portion of unrealized profit. Working 7. How much is there? 4. Okay, portion of unrealized profit. How much is there? 4. Next, minus. What we have to do? Anything else? Anything else? Check. Anything else?
Check.
Impairment. Current year impairment is how much? Current year impairment is how much? Current year impairment is how much?
31.5.
Current year impairment. That is the share of subsidiary, my dear. That is the share of subsidiary. But what is the impairment? Working 3. Current year impairment. I have written here. Put the highlight also. Current year impairment. How much?
35.
35. Is it? Current year impairment is 35. Okay. See what we have done. Again I will repeat. Profit for the year is 100. Last value we have taken. Depreciation on the revalue 20,000. We have taken for 1 year. We have calculated excess depreciation. We have added back that. Okay. Per portion of unrealized profit. Next, on the inventory, we have calculated the 60,000, 40%. We have taken that 4,000. Okay. Current year impairment is how much? 35. Okay. How much you will get? 100 minus 2 plus 1 minus 4 minus 35.
60.
Again now, See, we are just following the same thing. Is it right? In 60, what we will take? We will take 30%. Is that we will take 30%. 30% will be how much? 30% is 18. Is right? 30% is 18. Now only I am putting the things, okay, so that we will not have any doubt. How much it is? 18. In profit and loss account, we will take the profit share of subsidiary profit as 18. In the balance sheet, we will take NCI as how much? We will take NCI as 296.8. This we will take it in the balance sheet. This one we will take it in the profit and loss account. Can you tell me how we can calculate retained earnings? Tell me the structure. Then we will do, no problem. How we will calculate retained earnings? How we calculate retained earnings?
Net profit minus dividend.
Pardon?
Net profit minus dividend.
No. How we calculate retained earnings? Working 5. Retained earnings. We have done. Just recover. If you remember, recover. Okay, if you remember, recover. How we have done?
Return earning of P.
Good. How much is there? Parent company retained earnings are how much?
1350.
1350. Is it right? Given.
Yeah.
Given in question. Okay, always. 1350. It is in thousands. Next. What we have to take? What we have to take? Plus, minus, what we have to add, what we have to deduct? What are the profits? You have post-acquisition profits is there. We have calculated in working 2. Post-acquisition profits. Is it there?
Yeah.
How much is the post-acquisition profits?
261.
261. What is the 70% of this?
Yeah, 261 and 270%. 182.7.
We have to divide this acquisition profits now 70 and 30 in the profit and ratio plus post acquisition profits, share of post acquisition profits. Okay, how much is there from working 2? I am writing 261 times 70%. How much it will come? 261 times 70%, 182.7. It is there. Post acquisition profits. How much is this? 261. It is there.
261, yes.
Yeah, 261 into 70%.
Yeah. 182.7.
182.5. Anything else we have to add? Or deduct? Anything to add or deduct?
Let's check.
Minus impairment. Impairment of goodwill. How much is the impairment of goodwill? 105 times
105.
30%. In the previous case, we have taken 105 times 70%. Is it 105 times 70%? How much you will get? See the things. Here we have done 105 into 30% we have taken. From the profits of NCI, we have deducted 30% here. We have deducted 30% here. Reduce the profits of 30%. Here. Is it clear to you? Are you understanding or not? NCI share of goodwill minus NCI share of goodwill 105 times 30%. We have taken this.
Yeah.
From where we have deducted? We have deducted from statement of profit and loss account. Is it right? Statement of profit and loss account. In the similar case, in the retained earnings of the parent, what we will do? We will deduct the 70% share. There is an impairment of 105. 105 impairment will be distributed, will be shared by the parent and subsidiary in the profit sharing ratio, 70% and 30%. We have taken 30%, 31.5. Here we will take 70%. How much? How much will take 70%? If you take 105 times 0.7, it comes to how much? 73.5.
73.5.
See, retained earnings, 7 parent company share. NCI subsidiary company share. Retained earnings, the amount given in the trial balance, balance sheet, plus post acquisition profits, parent company share, impairment of goodwill, parent company share. Is that impairment of goodwill, parent company share? Now, apart from that, is it right? Apart from that, the most crucial point is point number 2. Okay, the most crucial point. In the examination also, they will twist somewhere one point they will give us for thinking only. Is it right? One point they will give. Every question will have like this. One point. Anywhere you can take. In the point number 2, is it right? In the point number 3, not 2. In the point number 3, at the start of the year, Papilla transferred a machinery to Satego for how much? 15,000. Is it? They have they transferred to how much? 15,000. The carrying amount is how much? 12,000. Is it? The carrying amount is how much? 12,000. What happens? The difference is how much? 3 in thousands. The difference is how much? 3 in thousands. See the things. What we have done. Is it what we have done and how it is reflected? That is also very important. This point you will understand once we complete all the steps. Once we complete all the, and again I will revise this point again and again, okay, till the last moment. Now they have transferred for 15,000. How much is that value? Value is 12,000. Means excess value is how much? 3,000. Is that excess value is how much? 3,000. This excess value you have to deduct. You should not take the excess value. You are purchasing the subsidiary, whatever the book values, you have to absorb. Take my word, I am telling you. We have to absorb. We have to absorb the assets at the book value, not at the fair value. We will calculate depreciation, that is different thing. Is it? We are calculating depreciation because transfer in value. This is not anything which has been increased. The value has not increased monetarily. It is only the transfer value. This transfer value has to be deducted. Is it? Portion of unrealized profit. I will say point number 3. I will write you for your understanding 15,000 minus 12,000. This is the transfer value. This is the transfer value and this is the book value. That 3 we have to deduct. The most critical point, if you ask me, the most critical point is point number 3. Okay, the most critical, but don't worry about that. By the time we complete the things, we will have complete clarity on that. Now, if you take the retained earnings will be for the parent company only. Is it? Retained company. First, what you have to do, take the amount given in the balance sheet, 1,350. Post acquisition profits we have done in working 2, 70%. Minus any impairment, we have to deduct that impairment. And here they have given that there is a transfer value and the book value. That difference in transfer value and book value, we have to deduct it from where? We have to deduct it from the retained earnings. How much is there? Tell me now. Anything is there, we have to take.
No, more than this, I think so.
Fine. Total, how much you will get? 1350, 182.7 minus 73.5 minus 3.
1456.2.
1456.2. This is the retained earnings. This is the retained earnings. Okay?
Yeah.
Now, very slowly, okay, very slowly, one by one we have to, I'm very, very clear on this, okay? One by one we have to make it. First you have to prepare income statement, okay? First we have to prepare income statement. We will do here only, okay? Consolidated statement of profit or loss for the year ended 31/3/2007. Okay? Now focus only on the income statement. Okay? Focus only on the income statement. Very slowly, don't rush. Okay? Now, how much is the sales? Tell me. Revenue. How much is the revenue? 1,000. And how much is the subsidiary? 260. It is there? revenue. How much is there? 1000 plus 260. It comes to how much? 1260. This is in
Yeah.
thousands. This is in thousands. I am writing everything very clearly to my best ability. Minus intercompany sales. Which point? Point number 4. Okay, point number 4. How much? 60. Is it right? Point number 4. How much? 60. How much you will get? 1200. Are you clear about this?
Yeah.
Okay, next. Cost of sales. Cost of sales, we have to be very well. This is minus, okay? I am putting it in one bracket. How much is the parent? Parent company is how much? 750 plus 80. It is there. 750 plus 80. How much? 830. Is it right? 830. Okay, 830. Now, see the things very, very simply. Is that minus intercompany sales? Intercompany sales. How much? 60. Is it 60? How much you will get? Okay, minus 60. Okay, now, fine. Depreciation, increase the cost. Okay, depreciation will increase the cost. Add depreciation. Where we have done this depreciation? We have done depreciation in working 6. Is it right? We have done depreciation in working 6. Is it okay?
Yeah.
Is it depreciation in working 6? How much? 2. Is it? Next. Portion of unrealized profit. How much is there?
Two.
Okay, portion of unrealized profit. From which working it is there?
6.
1 minute. Portion of unrealized profit is how much?
It's 2, doctor, in the working 6, right?
No, that is the depreciation, my dear.
Mm.
That is the depreciation. Okay, that is the depreciation. Portion of unrealized profit. Working 7. How much is there?
4,000.
4,000. Okay. Portion of unrealized profit. Portion of unrealized profit. Working 7. How much? 4. Okay. Portion of unrealized profit. How much? 4. Next. Anything else? This is portion of under for transfer of asset. No. 1 minute. 1 minute. Working 1, working 2, working 2. Something is missing here.
I think we didn't write the working 2.
Where? We have written working 2 here now.
Working 2, yeah, and CI working 6. This is
Working 2.
3,
Is
working
it
4,
right?
working 5.
2.
All, yeah.
6 is the depreciation adjustment is the 6.
Yeah, it's written. Yeah.
Depreciation adjustment is 6. We have taken that. 4 is the inventory. 4 is the inventory that we have taken here. This is respect to the inventory. This is with respect to the inventory. This is with respect to the depreciation. Next. Anything else?
This is only.
Point number 1, you see. Point number 1. Point number 1, you see. They have plant revaluation. Where we have done that? Plant revaluation. Where we have done that? This is see. Point number 6 is the transfer. Okay. Point number 6 is the transfer. This is with respect to point number 3. Is it? This is with respect to point number 3. Is it? We have, see what they have mentioned. Point number 1. Okay. They have calculated depreciation and for 10 years. Where we have done that?
No, working 4.
Working 4.
Down.
Is it? We have done on working 4. Okay. That we have to show in cost of sales minus depreciation point number 1. Is it? Point number 1. Again I am writing for your understanding. Okay. Point number 1. 20 times 1 year by 10 years. How much it comes? Is it?
2.
This is point number. This is point number 4. Sorry, this is
4, yeah.
point number 3. Okay. This is point number 1. Don't get confused. Okay. Point number 3 and this is point number 1. How much is there now? Are you clear about this? We have taken the cost of sales minus intercompany sales 60 plus we have first we will add all the expenses, then we'll deduct the expenses. Okay. Then we have depreciation, we have unrealized profit on inventory, and we have the depreciation on the revaluation. Is it? We have the depreciation on the revaluation. How much will come? 830 minus 60 plus 2 plus 4 plus 2.
778.
778. Minus 1 to 100. 422.
Gross profit.
This is the gross profit. Any doubt is there, ask me. Don't say everything yes. Understand point? Anywhere. I am putting as much references as possible for your clarification. Fine. Next. What is there? You have operating expenses. Is it? In the depreciation, in the impairment, they say that in the impairment the goodwill has been impaired. Okay. Now how much is the operating expenses? Minus operating
Yeah.
expenses. Operating expenses, how much? How much is there?
Minus 60 and minus
60, 35. Okay, 60 plus 35. It comes to 95 minus current year goodwill impairment. How much? 35. Is right? Current year goodwill impairment. Okay, 105 divided by 3 years. Okay, 105 divided by current year impairment. Is it right? How much we'll get? 0, 100, 130. Is it right? 130. 2, 11, 2, 12 minus 3, 9, 3 minus 1, 2. This is profit from operations. Is it right? Profit from operations. Okay. Next, you have to be little bit cautious about this. And when I'm saying you have to be little bit alert, you have to be little bit alert. Finance cost is how much? 2515. Is it right? Finance cost is how much? 2515. You have to be alert. Okay. Minus finance cost 25
Okay.
plus 15. How much?
40.
40. Now you have to be very, very alert. Investment income. Investment income. How much is the investment income? 20.
20.
Okay. Now what we have to dividends. How much they paid dividends? Subsidiary company paid
20.
dividends how much?
20.
20. What is the parent share?
70.
Okay. Parent share is how much? Dividends.
70.
Dividends. Parent company share. Okay. Parent company share. Very, very careful. 20,000. Is it right? 20,000 times 70%. 20,000 times 70%. How much? 14. Okay, how much? 14. Are you understanding this? Yes, Hussein and Sumaya, are you understanding this?
Yeah, Doctor.
I know where you will struck. I can understand where you will struck. It is how much? It is
6.
20,000 is the investment income. On these 20,000, they have paid dividends on 1st March. 20,000. But from these 20,000, how much is their share? The share is only 70%. 70% you remove. 70% dividends received from subsidiary, 30% dividends received from others. Okay, I will write this. Is it right? 70% dividends received from where? Received from subsidiary. Remaining, is it right? Remaining 30% from other sources. Is it right? I know if I write like this, you will have more clarity. Is it 30% from other sources? What we will take? We will take other sources. Is it? You see, you are paying dividends, I am receiving dividends. Doesn't matter. Once you have acquired, it is your property only. It is not the property of subsidiary. Then there is no payment and receipt. Okay, there is no payment and receipt. If it is different, it is going to be shown in the separately. Okay, it is shown in the separately. That is the reason we will deduct 70% share. Don't get confused. 70%. See, incidentally, 70% is parent, 30% is subsidiary. Fine. But here the concept is different. They have paid 70%, their share is 70%. In the dividends, in the total dividends, 70% of 20,000. Is it? It is received from the subsidiary. Means net investment income will be how much?
6.
6. Okay. This you will have doubt 100%. Okay. That is the reason where there is things will work. I will be very, very slow on that. How much you will get? You will get 258. Is it right? Profit before tax. Is it? Profit before tax minus tax. How much is the tax? 100 plus 30. Is it right? How much is the tax? 100 plus 30. Now again you have to be very careful. Is it right? Again you have to be very careful. How much you'll get? 128. Nothing is there. Profit for the year. What we have done previously, we will do the same thing. Understand? We will not do anything else. Is it right? We are not doing NIN. Now attributable to parent. Is that attributable to parent? How much is the total profits? 128 minus. Is that 128 minus? We have done somewhere in where we have done in working 4. Okay, working 4. How much is the profit? How much is the profit?
18.
18. Is that same thing we have done? Okay, same thing we have done. Is that how much is the profit? Is that 18? From where we got? Working 4. Statement of profit and loss. Statement of profit and loss. You put 2 lines here. Okay, done. Okay, this is 110. Is it? This is the parent share. Okay, what is the NCI share? Non-controlling interest. Working 4. It is how much? 18. It is clear?
Yeah.
Fine. Give me 5 minutes, I will complete the balance sheet also. Okay. Just give me 5 minutes. It will not take that much time. Okay. I can finish it off here only. Is that why we have to keep pending? Is that statement?
Yeah.
Statement of consolidated statement of consolidated statement of financial position as at 31st March 2007. Is it 31st March 2007? Fine. In thousands. Particulars amount. Now, first assets, non-current assets. How much is the goodwill? How much is the goodwill? Working 3.
Yeah.
How much we have calculated goodwill?
We calculated 245.
245.
But
Is it? After impairment, okay? After
yeah,
impairment.
yeah.
Property, plant and equipment. Okay? Property, plant and equipment. See the things. Little bit I will put more detail. Is it right? 900 is for the parent company. Okay? 900 is for the parent company. Subsidiary company is how much? Subsidiary company is how much? 400. Is it? Subsidiary company is how much? 400. Okay? Wait for a while. Okay? This is subsidiary company. Okay? Next. You have the revaluation. How much is the revaluation? 20. Is it? You have the revaluation. Is it? Revaluation is how much? 20. Fine. Revaluation is 20. Anything else? Anything else? Check.
And plant machine, doctor.
How much?
Let's check it from depreciation of
Depreciation how much? We have calculated on revaluation. Revaluation, depreciation how much? Revaluation, depreciation how much? We have calculated on 20,000. 20,000 into 1 by 10.
2.
2. Okay, 20,000 into 1 by 10. Is it 20,000 into 1 by 10? $20,000 into 1 by 10. Is it? Minus 2. Minus 2. This is depreciation on revaluation. Anything else?
No.
Anything else?
This much only.
During 40% and shows the receivables of 6,000, payables of 1,000, sent a check after the received has not been received. Check again, anything is there left over? We have to one by one, okay? Anything is left over is there? Intercompany sales, fine. This is okay. Something we have to write. I don't know where it is missing, but it is there. 4,000s, 6,000s. Three, 1 minute, dear, 1 minute. 1 minute. What we have to do, tell me. See, if working 2. Working 2.
And
Fair value adjustment. Is it right? Fair value adjustment. How much is there? For 3 years we have calculated this.
1, no?
Yeah,
1. No, 6.
6. We have calculated fair value adjustment. Is it right? Fair value adjustment 6. Okay. I will put this here. Okay. Little bit. Fair value adjustment. Minus. I am writing this. Okay. Minus 6. Minus 6. Is it? Minus 6. Fair value adjustment. Is it right? Fair value adjustment. Minus 6. Okay. This comes from where? This comes from working 2. Is it? This comes from working 2. Is it right? How much? Now you see. Are you clear about this? See, again I will say 900, 400 plus 20 revaluation, depreciation on the revaluation. Is it? Depreciation on the revaluation, and we have done fair value adjustments for the last 3 years. Is it right? For the last 3 years. How much will get? 900 plus 400 plus 20 minus 2 minus 6. 1312.
2.
Okay, 1312. Is that? We have to be little bit. Okay. Next, current assets. Current assets. How much is the slow? Again, how much is the current assets? Current assets are again little bit more sensitive one. Current assets 300 plus 600. Okay, 300 plus 600. Anything else? Unrealized profit is how much? Unrealized profit, where we have done? We have done working 7. Is it? We have done working 7. Working 7. Unrealized profit is how much? 4. Is it? Unrealized profit is how much? 4. Working 7. Okay. Unrealized profit is 7. Next, current assets. In the point number 5. Okay. Till now we have not done this. Now we are going to do in the point number 5, second sentence. San Diego, is it right? We have to start from here. Satigo, is it right? Satigo books showed a receivable balance of how much? 6,000 due from Papilla. Okay, 6,000. You have to deduct 6,000 from the receivables of 6,000. This disagreed with the payables of 1,000. Is it? This is disagreed with the payable of 1,000. Fine, 1,000 in Papilla books due to have sent by check. 6,000 is the receivables. Payables is how much? 5,000. What is the disagreed amount? Disagreed amount is 1,000. Okay, disagreed amount is how much? 1,000. That 1,000 you deduct, that's all. Okay, 1,000 from the receivables, 1,000 from the payables. Is it? Whatever the amount which has been disagreed, you deduct that disagreed amount. Okay, you deduct that disagreed amount minus 1. Okay, minus 1. You can do in other way also. Okay, how it is there? Minus 6 plus 5 minus 1. Okay, minus 6 plus 5 minus 1. Okay, how much is there? See the thing, this is the parent, this is the subsidiary, this is the unrealized one, and this is what? This is point number 4. Is it? Point number 4. How much you will get? 300 plus 600 minus 4 minus 1. It comes to how much? 895. Okay, it comes to how much? 895. This is the most difficult problem. Okay, this is the most difficult problem. Fine. Total, how much you will get? 245 plus 1312, 895. 2452. These are total assets. These are total assets. Next, share capital. How much is the share? We are taking only parent company. Okay, we will not take anything for subsidiary. Already subsidiary is over. Parent company. How much is that? 200. Share premium is how much? 50. Is it? Share capital is how much? 500. Share capital is how much? 500. Share premium is how much? Share premium is 50. Retained earnings, we have calculated. Retained earnings, working 5. How much is there? Working 5, 1456.2. Is it there? 1456.2. Okay, 1456.2. 1456.2. Okay, we don't have anything. Okay, 1456, 500 plus 50 plus 1456.2. It comes to how much? 2006.2. Okay, now non-current liabilities. Non-current liabilities. How much is there? Non-current liabilities. 100 plus 90. Is that 100? 100 plus 90. 190. Current liabilities. Is that current liabilities? How much is the current liabilities? Current liabilities are how much? 200 plus 60. Is it 200 plus 60? 200 plus 60 minus 1. Is it right? In the receivables, in the current assets, we have taken minus 1. Okay, minus 1. Okay, from where we got minus 1? We got minus 1 from point number 4. Okay, we have taken, see, I will put this. Is that here?
Yeah.
Is it right? Here and here. Okay, here and here. 260 minus 259. Total, how much you will get?
Five, nine. 2455.
How you got 2455? Anything we have missed?
2006.2 plus 190 plus 259. 244.2 minus 2452. 3.2.
500 plus 50 plus 1456.2.
2455.2.
200. Share capital is how much?
Share capital here we return 500.
How much is the share capital?
Share capital is 200 plus 150.
Why 150? No, only 200. Only 200.
Oh yeah. For parent company. Yeah, 500. It's supposed to be 200, right?
Yeah, sorry, I have, okay.
Yeah.
200.
Yeah.
Now, 200 plus 50 plus 1456.2. 1706. Is it right?
No,
1706. 1706 plus 190 plus 259. What we have not done? What we have not written? What we have not written?
Tax?
What we have not written? NCI. Working for.
Oh, yes.
Statement
NCI,
of financial position. Statement of financial position. How much is the NCI? Statement of financial position. 296.8. It is there? It is there?
Yeah.
296.8. See on the right hand side. Is it there?
Yeah.
296.8. 296.8. Is it right? 296.8. Now you calculate again, it will change.
Yeah, give a second. NCI.
200 plus 50 plus 1456.2 plus 296.8. How much it will come? 2003.
296.8 for current liability.
How much you'll get? 2452.